really our job is to analyze and figure out what loan program is best for you. But the biggest pieces are conventional. You can put 3% down. Credit score, ideally, I always like to start at least 700 to really figure out if that's the best fit for them. There is private mortgage insurance. The huge benefit of that is that falls off automatically when the loan hits 78% loan to value.
For example, your goal is to bring as little money to close as possible. Then we need to coordinate with the real estate agent about, okay, you desire the seller maybe to try to pick up some of the closing costs to bring that cash to close down to us. And to kind of set the tone for how important the pre-qualification process is, there's been times where I found that people don't start with the pre-qualification process. They maybe go out and they start looking at homes first, and then they like the homes and they maybe have an expectation in their mind of what they want to pay for a monthly payment. And then by the time that they get to me and I go over what the monthly payment is, they can have a lot of disappointment when they find out what the reality is of what that home is going to cost for an estimate.
And what that is it's exactly what it sounds like. It's an estimate. It's an estimate of all the fees that are going to be incurred by you for the loan. Now, it doesn't necessarily mean what that amount says you're going to have to bring, or it's, for sure, it's what we're estimating with the knowledge that we have. And a lot of times we don't necessarily know like what your insurance is going to cost. We might not know what the appraisal is going to cost yet because we haven't gotten those bills yet. But we want to give you an idea of like, here's your loan amount, here's your down payment, this is your payment, your monthly payment, this is the money you need to bring to closing. And we call it cash to close, but you can't bring cash. It has to either be a certified check or you can wire the money. But the cash to close is split up. I split it up, or how I think about it, there's two amounts. There's a down payment if there is a down payment, that's part of it. And then the other part is those other fees that you have to pay for a loan. Together that we know an underwriter is going to need to be able to give you a loan, so we can give it to the underwriter and they can go through and look at it. And the process usually goes, we give them a whole bunch of stuff, they look through it, and then they'll tell us all of this is great, maybe this isn't, we don't like this, we need another pay stub or whatever, and they return the file back to us with conditions is what they call it, which means you're approved, you're conditionally approved. And the way you're going to be fully approved is if you give us the documentation for all these conditions. So before we get there, we're going to get, like I said, updated information, pay stubs, bank statements. We want to get a copy of your earnest money check, because that way we can take it into account that you've already put money out into the transaction, so you don't have to bring it at closing.